Well, good morning, everyone. Thomas Montgomery. It's great to be with you this Monday morning. Today is Monday, May 19th, 2025. We get together most weekday mornings at this time, 8 o'clock Central, to talk about strategies, tips, techniques, share success stories, and really what's new. As a 501c3 nonprofit, we are focused on improving financial literacy and increasing access to capital to start and grow small businesses. Well, today's topic is a very relevant one in terms of, I think, both of those, but most importantly on getting funding. If you're out like I am talking to small business owners on a regular basis, sure, financial literacy is great, but what they want is the money. They want the money. So what do we know? We need to have a fundable business if we want business funding. But what we have now is a new lender relationship that frankly has a lower set of underwriting that's allowing us to get more clients into the funding phase more quickly. They don't want me to say that it's 100% approval, so I won't say that it's going to be 100% approval, but we do expect everyone that goes through this lender to get approved. Why? I'll tell you specifically why we have such high confidence as we go through. So we're using a different device today. So let's start with our topic here at the top, which is, sorry, let me get my highlighter going. Our topic is we want to introduce you to our new SBA, preferred SBA lender, who's ready to fund your client's projects. Now, the max for this lender is $5 million. And so I know that you may on occasion or even frequently have clients that are looking for more than $5 million. But because of the nature of the SBA 7A loans that we're using through this lender, the guaranteed portion is at $5 million. That doesn't mean that the lender won't go higher, but the SBA cap on the 7A is $5 million. So for example, if a client wanted $6 million, could we still use this? Yes, but the guaranteed portion would only be $5 million of that. Let's go ahead and go down here to the second point. It's my experience, and you can tell me if you feel differently, most people misunderstand SBA loans. And we've got 548 of you on this morning. I used to work for the SBA, and I know probably about 10% of you that's on the Zoom today also have previously worked with the SBA. So from the outside perspective, one of the first things that people make as a mistake when they think about SBA loans is here on this bullet. They think that the SBA is the lender. But the Small Business Administration is not the lender. There's going to be a bank, some sort of financial institution that has been delegated authority to administer SBA loans. So the SBA is really the guarantor. It's like a reinsurance. The lender is going to be that bank or that financial entity. So in truth, there's actually two levels of underwriting going on when we're pursuing a quote unquote SBA loan, the lender itself and the SBA requirements. Now, the SBA, going to the second bullet, the SBA requirements are very clear, objective, set forth, and they can be revised periodically, and there are some revisions coming up June 1st, by the way. But the bottom line is it's all in the SOP, the standard operating procedures of the SBA. However, third bullet, the individual lenders have a different set of requirements in many cases. Because when the SBA is guaranteeing a loan, they usually only guarantee a portion of it. So the lender has some exposure. So you have two sets of underwriting criteria. And so very often what we'll hear people say is, oh, the SBA won't fund startups. That's entirely inaccurate. Or the SBA requires high credit scores. That's inaccurate. but people will hear what the lender, an individual lender, might require, and then they extrapolate that to be a universal truth. So I think one of the things that makes you and I different than most people is you and I look at facts. Facts. What is truth? Not what's opinion, not what's emotions. It's very difficult to be successful in business if you're emotionally driven. But instead, if we focus on the facts, then we can be very successful. So today we're clarifying a fact that individual SBA lenders, as stated here, often have higher requirements than what the SBA does. So what's the point? We could go to 10 different SBA lenders. We might get approved by 5 and get declined by 5 or some other combination, but it's the upfront lender that's often filtering people out. So we have a new SBA lender partner, and I'll tell you a little bit more about them here in a moment, but they have some of the lowest requirements that we've ever seen. They know about our shelf court program, they're excited about it, and it fits really well for the types of clients they're looking for. Now, increasingly, on the 4th bullet from the top, increasingly SBA lenders prefer to work with technical advisors. There are some lenders that will only take files from technical advisors. And you might say, well, what's a technical advisor? Well, that's what we are, right? So we're not the lender, we're not a bank. The world doesn't need another bank, the world doesn't need another lender, but it's the technical advisors that increase financial literacy and get the document, the loan package together. So what you and I do, if you are one of our distribution partners, and if not, you're welcome to become one. It's free and easy. But the bottom line is what you and I do as technical advisors is help the client qualify legally and ethically for the loans. So let's go back to our new preferred lender. And when I say this, I'm not exaggerating at all. You can call bullshit on it if you want, but it's not anything but the truth. On a typical day, we'll have 2 to 3 calls and even more emails coming to us and texts where lenders want us to send our clients, the shelf court clients, to them for funding. So I think sometimes people think, oh, banks don't want to loan money or lenders don't want to loan money, or it's hard. Well, you have to realize there's people that work at those entities. Their jobs depend upon them finding small businesses to loan money to. So they're looking for fundable businesses. And so I think sometimes when people don't have a fundable business, they go apply for funding, they don't get approved, and they think, oh, it's no one wants to loan money anymore. That's very untrue. That's how their stock of JP Morgan, of Bank of America, that's how these banks survive and thrive and create a return for their shareholders by loaning money, but loaning money to borrowers that can afford it and will repay it. So our new lender had reached out to us, actually one of the reps, and then once we talked, he quickly pulled in the senior underwriter, and I had the opportunity to visit with her, and we're actually working at that high level now with that senior underwriter. So what are some of the highlights? And this is a print screen, so we'll roll over to the next page in a moment. But what are some of the highlights of how this SBA lender is approaching business loans? And that also obviously interfaces with what the SBA requires. So what I mentioned up here on the 3rd bullet is a lot of times SBA lenders will have higher requirements than what the actual SBA does for the guarantee. One element that you may not be aware of is that we might go to an SBA lender but not get an SBA loan because they may decide not to get the SBA guarantee. They might want to keep it themselves because there's cost and paperwork to them, getting a little bit deep. And again, if you're one of our resellers, one of our grant coordinators, this is just all value-added information. Your job, your role is simply to go educate on shelf corps and sign people up. Our finance team handles all of this, but I thought that you might benefit from seeing kind of behind the scenes. So the credit requirements are low. The credit requirements are 165 FICO. Some of you say, oh, I don't even know what that means. And that's okay, because there's different credit score underwriting for different uses. So for example, there's a FICO score for mortgages. There's a FICO score for automobiles. There's a FICO score for credit cards. There's also a FICO score for business loans. So there's different algorithms maybe you aren't aware of. When we do these, this is what we're going to call a working capital loan. So there's a different type of SBA loan called 504, and 504 becomes more relevant if we're going to buy equipment or real estate or hard assets. 7A is what we'll typically call working capital. So they're sending you the cash, not sending the money to the title company to then forward to the seller for a purchase of real estate. So what's the point? For working capital loans, these are going to be 10-year, 120-month. That means the same, right? Because there's 12 months in a year. You might say, oh, no, Tom, I've got to have 20 years or this is not going to work. I don't think we're going to find typically a 20-year repayment term on working capital. But yes, we can go longer term if it's for real estate or a 504 loan. A lot of people get really concerned about interest rates, and I can understand because that's kind of the cost of capital. The principal amount, let's say you go borrow, your client goes and borrows $5 million. Will they need to pay the $5 million back? Well, they're expected to. That's kind of the deal. So where does the lender make the money? Well, the lender makes the money on the interest rates. But when you're looking at SBA guaranteed loans, we're looking at low interest rates, not high. This fourth bullet under highlights is probably the most important one because it makes a really big deal. And what it states is that we have, I don't want to go as far to say that we have delegated underwriting from them, but we have the specs, we have the recipe, we have the formula that they're specifically looking for. So just think of you and I. If you and I were going to go bake chocolate chip cookies and you wonder, well, if the love of your life will like your cookie, will they like it or not? Well, if you had the exact recipe and the exact ingredients, then yeah, your boyfriend, girlfriend, significant other, husband, wife would probably say, those are some freaking great chocolate chip cookies. Well, we have the recipe, the formula, the senior underwriter has provided that to us. So we're going to play a more active role with this lender than we do with some others because of our role and understanding of exactly what they want. And I'm going to go through some differences because this lender has a couple differences that other lenders may not require, but I'm going to go through that in a minute. Next bullet, fast funding, flexible use, and let's go ahead and go over to the next page so we can see. Let's see if I can get over to the next page. Hold on here. Get over to the next page so we can see what those requirements are. Let's see, why is it not progressing here? I'm trying to use a different device today. All right, let me stop the share for a second and I'll just share the second page rather than both because I wasn't able to move forward. Give me a second. Okay, great. So here's page 2. We should all see. So we're picking up where we left off. So what can we use? Let me use my little starburst here so we see where we're at. We're at the top. Flexible use. So flexible use of proceeds. So this is in general what the lender has told us that this can be used for. And this is falling in general line with SBA 7A loans. So it's not really different. So we can acquire land. We can purchase existing buildings. We can convert, expand, and or renovate buildings. We can acquire and install fixed assets. We can acquire inventory, purchase supplies. We can actually buy a business. A lot of clients right now are looking at acquiring a business, whether it be a franchise or just an existing business. And I mentioned briefly before, there are some SBA changes coming on June 1st, and one of which is they're reinstituting the SBA franchise list, which they discontinued a couple years ago. So purchasing a business, the point is a really great approach to, frankly, a pretty easy approval, because we're able to leverage the success of either the franchise in terms of their other franchises, and or purchasing a business that already exists and using their financials. But we can also start a business, so it's okay. So it goes either way, because in general, we only have two options, right? We're either starting a business or we're purchasing a business, and this can be used for both, can be used for working capital, and can be used for refinancing. Okay, so what do you need to know? I think you definitely need to know, because pretty much everything in life has pros and cons, and I think just about everything that we've discussed so far are the pros, the advantages. So what do you need to know? This lender has some required documentation that is above and beyond what normally comes with what we deliver with a shelf quote package. Now, we're still going to assist the clients with this, so it's not like we're throwing them to the wolves saying, uh-oh, if you're going to use this preferred lender, you got to go figure out something. It's not that at all, but we're just having a disclaimer, right? We want to have clear transparency of how this works. And it's a really good deal, but there's a couple additional items that they typically request. So let's go through those. Oops, moved. Debt schedule. A debt schedule is and we have a specific template that they want us to use. So no, we're not going to just wing it. But the debt schedule is a simple one-page document that demonstrates the debts that the business currently has. Now, I mean, you might say, well, my business doesn't have any debts. Well, you may know that, but they don't know that. One of the biggest mindset changes we need to have for most of us when we go apply for business funding is don't assume that the lender knows what you know. You're smart, you're motivated, you've got a vision, you've got a plan. But if we don't share written documentation with the lender, they don't know what's in your head. So the debt schedule confirms, does your business have any existing debt? For a lot of the clients who are buying a fundable shelf quote, we might say, well, no, because they just acquired the business. It's coming to them clean. But is that true? Because if they're using our buy now, pay later financing, which is fine, 0% interest, 100% approval, then there is a debt, isn't there? So if a client is using our buy now, pay later lending, so does that keep them from getting funded? Of course not. But the point is, we need to be honest and accurate. And when we put together documents for lenders, we have to be honest and accurate, because if not, that could be considered fraudulent. So while in some areas there's some room for creativity and optimization, the debt schedule is not one of those. It's black and white. So yes, any client that bought a shelf quote from us or through us that is financed through the buy now, pay later lender will have a debt shown on there, unless they paid it off already. But it's not a problem. But the debt schedule is something that you've not heard us talk about, because not all lenders require it. This one does, and we're going to prepare that before we submit the package. Second of the three sub-bullets is a notarized attestation. So let's go back to what lenders want. Lenders do want to loan money. If you are a conspiracy theorist and say, oh, lenders don't want to loan money, you're a fool, right? Because that's what they do. And if they don't do that, they'll go out of business. But they do want to loan money to businesses that will pay them back. So that's normally the role of underwriting, right? They're gathering information to determine, do they think that the client will repay the loan? So with that being said, they understand our model really well. They love our model. They're asking for our business. They're asking for your clients. Those of you that are resellers, they want to fund your clients. But one thing that they can look at real clearly is, have these clients that are on the buy now, pay later, have they remained current? Because there's a payment schedule with the buy now, pay later. Now, again, I know there's a lot of people that get shelf corps that are not on the buy now, pay later. But if they're using the buy now, pay later, we're including a notarized attestation that states from us to be on the record, yes, Joe Smith, Bill Jones, Betty White, whoever the client is, their business is using our financing program and they have paid as agreed. That's a big deal. It's almost like a reference, right? Have you ever gone to apply for a job and they said, hey, can you provide a reference? This is probably the strongest reference that we can provide for a client to a lender is, yep, they have paid as agreed, paid on time. And in general, we want to do that, right? Going back to what we said earlier, you and I are different than a lot of people. We manage by facts, not by emotions, not by opinions, by facts. And with the buy now, pay later, there is a factual repayment plan, which isn't the topic today, but there's a factual repayment plan. And so people either are current or they're not current. So that is the second of the three elements. So we'll provide that, of course. So we're going to help the client with the debt schedule because we have this specific form that's needed. We'll provide the attestation. And then the PFS. PFS stands for personal financial statement. Now that's fairly common with business loans and with SBA loans. Sometimes it's referred to as the Form 413. But we have, by working with a lender, we have an Excel spreadsheet that's relatively easy to use. It does the calculations automatically. We need that. So we need that. So we need these three things for this new lender, but we're going to assist with. Okay, so then we get to the question of, well, this sounds pretty damn good. What do we need to do? How do we access up to $5 million? And I see Harvey's asking what's the minimum. I asked the lender that, the underwriter that this past week, and they like to do bigger deals. They call it 2 comma deals. They really like deals that have 2 commas in it because it's about the same amount of work. So in other words, $1 million or more. Will they go below $1 million? They will. They'll even go below 100,000. But with most lenders, they like bigger deals because it's just worth their time more. But I would say if there's a hard minimum, I don't think they'll go below 50,000. We could always try it. But they like 2 comma deals, meaning $1 million. Okay, how do we access? Well, we're going to help the clients assemble the package for submission, which is what we do. We're technical advisors. We discussed that earlier. And then we work directly with the senior underwriter, a wonderful young lady that we have her cell phone and her email, and we text on a frequent basis. She's looking for your clients' deals. So no smoke, no mirrors, no BS. She is looking for your clients' deals. So we need to start getting your clients' deals into her because they're hungry for them. And as I mentioned before, we're not the lender. Do we have a delegated role in this? Yes. Do we know exactly what they're looking for? I believe so. Are they asking us, trusting us to put the documentation together? Yes. So we can't guarantee approval legally because we're not the ones writing the check, but it is pretty much, we're in very solid footing. As far as support and resources, no change there. Let me try to get rid of this. There we go. So if you're not a grant coordinator but would like to become one, very simple to do. You go to 509pacific.org. No contract to sign, no money to pay. It's a revenue stream to you. You go out and help educate. You refer people in. You actually get to determine pricing, but normally you're making right at $5,000 up front per deal, which isn't get rich quick, but it's a nice side income. But the bigger amount is the 5% on the back end. We try to primarily, second bullet, we primarily try to support you with our text line because we don't charge you to be a reseller / grant coordinator. It does mean the same. We have to manage how much time we put into supporting each of you because we're doing it for free, right? You're not paying for any training or support, which is fine. So our main way to support you is through the text line, and that's 903-347-8042. Some people get confused and they call that number. If they call the 8042 number, that's bad because it's usually not answered live. It's not meant to be answered live. But instead, with the bottom bullet, our main number, 903-200-8781, is answered live. We have a whole team of receptionists during office hours, Mondays through Fridays. Sometimes people expect us to be available 24/7. I'll close with a funny story. So my family and I were at Sam's on Saturday shopping, and one of our clients texted on the support line, which is right. That's what they're supposed to do, and kind of demanded a call right then. And so we rotate who's on call for kind of these after hour emergency inquiries, and it was my weekend to be on call. So I text back and said, I'm at Sam's Club with my family right now. I'll be back in the office Monday, because I'm thinking, how big of an emergency is this client having on a Saturday? Well, he went to his baby mama, and then she called me just complaining that I was unprofessional for telling her baby daddy that I was at Sam's Club with my family on the weekend. So again, people are great. People have different philosophies, but best bet is to text. You can call live. So let's go ahead and just spend a couple minutes with the Q&A, and then we'll wrap it up today. Kenny says, good morning. Well, good morning to you, Kenny. Kenny says, business profiler. Don't know what that means, Kenny, but thank you for sharing that with us. Let's see. Marco says that the upfront payout. Yeah, so as a reseller, you're paid twice upfront and then as a percent of the client's capital raise. Marcos, you determine how much you're paid upfront, but it is a flat 5% on the back end. Let's see. Tom asked if someone's different. Tom asked if a client's using the buy now, pay later, and they're not staying current, does that hurt their eligibility? Well, I'd say let's figure out what we need to do to get them on track, right? Because they need to do as they promised to do. And again, that's the difference in what you and I, how you and I, all of us think versus the average people. You and I think in terms of factual, right? What's the deal? What is the agreement? People that are emotional, often people that are less successful, they ignore the facts, and there's always a but. Yeah, I agreed to pay per plan for the buy now, pay later, but there's always some sort of conjunction where they excuse why they're not doing what they promised to do. That doesn't fly real well with lenders. So if they're not compliant, let us know, and we'll do what we can to get them back on track. Let's see here. We've got a few questions that seem a little bit off. Claude asked about the interest rate, but yes, sir, we went through the interest rate a few minutes ago, so you'll see that. Fair asked, how does the lender work with lenders who have had defaults in the past? Well, the Shelf Corp is different, right? Because when we provide a fundable Shelf Corp to them, they have a new business, or a business that's new to them, that's in good standing. So that's the beauty of using a Shelf Corp, is we don't have to go worry about any hair or complexities or problems with the prior business. Rachel's asking what's required in the buy now, pay later. Well, what happens, Rachel, is that clients will work with one of our resellers. They'll buy a Shelf Corp, and then the finance app is sent to them. They complete the finance app, and then normally they get cash funding. It's only those that don't get any cash offers that go to the buy now, pay later. So that doesn't happen too often. Martin asked about the PFS. Yeah, so the PFS is a very important document, but what's really great about it is there are some legal and ethical ways that we can optimize it. And so we're really good at that. So remember, those of us that are going to be working with these clients, we all worked at the SBA, so we know what's allowed, what's not. Not how to blur the lines, but certainly how to optimize it. So yes, we can take anyone's PFS and make it very strong legally and ethically. Mike asked where to send signed contracts. So what happens if you're a reseller, you'll text us on that support line, and on your first deal, we will send you a portal access, and then afterwards you'll upload to that portal. Larry says there's a lot of background noise. Yes, sir. They're working on pouring concrete yet again. We're expanding our facilities. We're building a new structure in front of our current one. And they're literally out there. I can look out my window. Well, they're putting the form together and the concrete truck's on the way. So I apologize for the background noise, but it's the sound of progress, Larry. Sorry about that. But if anyone needs specific help, again, I recommend using that support line that I showed you a minute ago. Let's see if there's any other questions we can cover real quickly. Letitia asked about timelines. So we need to think differently about timelines. We have to have a fundable business. Now, Letitia, if a client already has a fundable business, they don't need a shelf quote. We can go right into funding. And we're happy if any of you who are resellers, if you already have a fundable client with a fundable business, that's fine. We can help them move right forward. That's rarely the case, but if that is the case, great. We can skip the shelf quote. But if they don't have a fundable business, our best bet, I believe, is to use a fundable shelf quote because it's already optimized. But I think that's William's question as well. Yeah, so we're not going through today all the deliverables. Darius is asking a question about the deliverables of a fundable shelf quote, but I don't want to muddy the water. Today's goal was to get you all up to speed, and so let's go ahead and pull that up as we close. Give me a moment here to pull that up. Let me share the initial screen here, and that's going to come back up as we wrap up. So our goal today was to help you better understand our new preferred SBA lender. We went through some good information. If you want to be a grant coordinator, third from the bottom bullet here, go to 509 Pacific. Our text line, I think some of you failed to take note of that before, and you're asking me, that's 903-347-8042. That's what we recommend, but you can call and talk to someone live at 903-200-8781. So hopefully today's call was useful. It's real. It's legitimate. Anyone that says anything different is delusional, right? Lenders want to loan money, but they want to loan money to quote unquote fundable businesses. We have a new lender relationship that will make big deals affordably, fast, and we know the exact formula, the underwriting they're looking for, so we can help the client, including putting together the additional 3 documents, the debt schedule, the attestation, and the PFS. All right, have a great day, everyone. We'll see you back tomorrow morning. Appreciate your time. Bye-bye.